And right below that, we see various different types of orders. So what I want to explain now is the different order types in the Webull app and the ones that you yourself may want to use. The most common is the market order, and this is where you're looking to buy the underlying security at the market price. So it's going to fall between the current bid and ask of that asset. So in this case here, it would be between $4.80 and then $485. Now the market is closed right now because of the holiday, but you do have this option here for extended hours trading where they will place orders up through 8 p.m. Eastern time on days that the market is open. But just understand that in aftermarket hours, there's a lot less participants. So you can have less favorable conditions for your market order being filled, and there can be a greater spread there, or the difference between the bid and the ask. So in layman's terms here, there can be greater swings in the price that you're paying if you execute orders in off-market hours. But that's the market order. If you wanted to use a limit order, this is where you are saying, I want to buy it at a fixed price or better. So if you were worried about the spread there, the difference of the 480.50 all the way up to 485, and you were saying, I only want to buy this if it's $480 or better, what you could do here is set a limit order, and you could set that price to whatever you want. It gives you the options of the bid and the ask, but you could say, for example, 480 is the price I'm willing to pay. If it's better, we'll take it, but if it's even a penny higher, we're not going to let that order go through. That is what a limit order is. And on the sell side, it works in the same manner, except you're specifying the minimum amount of money that you would be willing to sell those shares or that share for. And that is helpful for basically setting a price that you are willing to sell for if you're looking to sell it at a price that it's higher than where it is today. So if I wanted to pay exactly 480 or better, I would use a limit order, and you could set that quantity here. But I first want to show you the other order types. A stop order is going to set a stop price higher than the current price, and if the market rises above that price, the market buy order is triggered. Now that might sound kind of weird as to why you would want to trigger a market order buy if it breaks above a certain price, but if you get into technical analysis and you are trying to track a stock that is breaking out, you might, for example, want to enter a position if it breaks out of a certain price level. So that's one scenario where you might use a stop order. A stop limit order allows you to set a stop price higher than the current price, and if the latest price rises to that stop price, the limit buy order is triggered. That's a little bit different because you're combining the stop order and the limit order. It essentially means if it goes above that stop price, it would then activate your limit order, and then that set limit price or better would have to be met. So let's say, for example, you wanted to activate this order after a breakout, but you wanted to still pay only a certain price. Maybe if it came back down to a lower side of the trend, then you could have it activate that limit order. And then a trailing stop order is going to track or trail the lowest price of the stock based on criteria that you set. So if you wanted to have an order in place that said, hey, if this stock drops more than 5% on any given trading day, for example, I want to automatically sell here and possibly cut my losses. Or maybe you set a trailing stop on a stock that you think could continue to go up, but if that rally loses momentum and you see a drop on a given trading day, it would automatically trigger that order. So those are the order types. In most cases, you're going to be either using a limit order or a market order. And for the case of this paper trade, we're just going to do a market order here of VOO, the S&P 500.